So I know it's taken me a little bit longer than I originally intended to get this posted, but this is going to be the slideshow for chapter 21, the lecture portion. And like I mentioned in an email and to those who were in class last week, um, we're going to look at questions from chapters 20 and 21 on Tuesday. So we're going to go over and work through some of the problems for these two. So hopefully this is not a very long chapter, and hopefully between whatever reading you could do and this presentation for chapter 21 and the slides from chapter 20, you can have a good foundation and background for what we're going to go through on Tuesday. So these are just the objectives to get out of this chapter. We don't really need to focus on that because we'll go through them all individually. And first we're going to talk about accounting for proprietary funds. And if you remember, the proprietary funds are going to be basically the business type activities that a government does. So these are going to be the funds or the parts of the government that most closely mirror or reflect the type of accounting that's done for non-governmental, just normal business type entities. So we're going to be using accrual accounting. You see the basic accounting equation for proprietary funds there. Looks very similar to an algebraic change to the basic accounting equation. So you see current assets and non-current assets set out separately, and the only reason that they're set out separately there is so that you realize the difference and distinction between what the accounting for proprietary funds looks like compared to the other governmental funds that only look at current assets and current liabilities. But you'll see that that basically follows the format of a balance sheet, with the exception of changing what owner's equity would normally be to the verbiage you see here of net position. And this type of accounting is done for internal service funds and enterprise funds. So again, these are the types of funds that operate closely like a business. And for the internal service funds, these generally are the motor pool department. So basically the garage or the department that handles maintenance and such on the governmental units vehicles. There could be a print shop type fund, and also many governments use a self-insurance, and if that were the case, then you might have an insurance fund for the governmental entity as well. And pretty much always these funds, they may at the very outset of the fund show up as revenue from general fund or other funding sources, but the purpose of these funds is that they're basically supposed to be self-sustaining. So the revenue charged would generally be charged to other funds within the governmental entity, but you would see here, as the bottom bullet point says, instead of accounts receivable, you're going to have an account that would say due from ... whatever other fund it's due from. So again, these are internal funds that do services for other parts of the government, but they function more like a business due to the nature of what they're doing, basically charging the other various parts of the entity for specific work done, just like a business would normally do. So this is a look at what some of the journal entries would look like for a motor pool fund. So at the outset, you see basically a contribution of cash and vehicles. The cash coming from the general fund and the vehicles just from the municipality in general. So you see the debit and credit entries there. And then for ongoing operations, this is assuming that that service is rendered in the amount of $130 or some multiple of that to a general fund and special revenue fund. So 100 to general fund, 100 to special revenue fund. basically have an account receivable from those funds that you see there. And then on the general fund and special revenue fund side, you see what the entries should look like in both of those funds. And then when the actual cash transfer takes place from those other funds, operates very similarly to as if it was an account receivable and payable to an outside entity. It's just the verbiage changes to due from and due to instead of accounts receivable and accounts payable. Most of the other transactions within these internal service funds mirror what a business looks like. So you're going to have expenses rather than expenditures like you would see in the governmental side. You record all of the appropriate events in the lifetime of fixed assets, just as you would for a normal business entity. And then income is closed to unrestricted net assets at the end of the period. Then the next type of business type fund is going to be the enterprise funds. So you will often see these associated with utilities. So if you have, water, sewer, electricity, any of those provided by the city, sanitation, you could have separate enterprise funds for each of those, or a utility fund in general. Also, if the city runs a civic center, a golf course, sometimes an airport, depending on the size of the city and the size of the airport. Again, these entities could be started with contributed capital or transfers from some other fund, but once they're up and running, generally they will be self-supporting and oftentimes produce enough revenue that they are kind of helping to subsidize some of the other parts of the city operation. So this is what you would see for a deposit from customers, like to start service or whatever the case may be. So this would be considered a liability because you're basically holding that money in trust against the possibility of default by the consumer. So while you're holding it, it's a restricted cash debit, and a customer deposits credit, so that customer deposit account would be a liability account, and then the cash account would reflect the fact that that's cash, but it's basically non-spendable cash. This would be reflective of an instance where you get approved for a $50,000 grant. So that first entry is basically when that grant is approved, and when you receive the notice of reception of that grant, then you can go out and make purchases on a note payable. So you would go out and actually purchase whatever equipment that you needed, and then of course the actual reimbursement of that purchase would come in the form of cash, and that's what the bottom journal entry that you see there is reflective of. So here you see in that first entry in the enterprise fund journal entry, that's assuming that you're basically sending out bills to the general public for 500,000 or some multiple of 500, and assuming that 40 there represents the amount that you're billing the city as a unit. So that's reflected in the charges for services, and then the general fund reflects the expenditure there for basically acknowledging the fact that they owe the enterprise fund for providing utilities or whatever it is that is being billed to the city there, or the unit. So here you have a collection on some portion of that. The enterprise fund is going to use some type of bad debt or uncollectible accounts similar to what you would see in a business enterprise. And obviously this is representative of not all of the bills getting paid, but assuming the full amount gets paid by the city to itself or to the enterprise fund, and then a portion of the accounts receivable are collected, and obviously a portion here is not being collected. So that's not reflected in any of these journal entries, but there would be a journal entry that would show an allowance for uncollectibles or bad debt expense as needed, basically. Then here you just see on this slide some more similarities between enterprise funds and normal operating businesses that are not governmental entities. See some of the stipulations here when issuing bonds and how income is closed to unrestricted net assets, similar to what we saw in the other type of business entity, the internal service fund. Okay, so proprietary funds. So for actual financial reporting in them, the fund financial statements that you'll see are statement of net position, which statement of net position is basically your balance sheet, statement of revenues, expenses, and changes in fund net position, which is basically your income statement, and statement of cash flows, which obviously would be similar to a normal statement of cash flows. For each major enterprise fund, you have an aggregate of all non-major enterprise funds and an aggregate of all internal service funds presented. And you see there the distinction between enterprise funds and internal service funds, with the fact that the enterprise funds are business type activities or under that segregation, whereas the internal service funds are under the governmental activities side of the house. You see here with the presentation of the proprietary funds, you are still getting, since the accounting for the internal service funds is so similar to the other enterprise funds, you see those reported on the same page as the enterprise funds, and that in place of equity accounts for those ISFs, you will see net assets shown instead. Okay, so on the government-wide financial statements, for the internal service funds, you have these financial statements, but the only activities that you see included are external activities, so any transactions that take place within the governmental unit are eliminated. So this is very similar to what we talked about with mergers and acquisitions, where you've got a parent and subsidiaries, and then you've got combined statements or consolidated statements. Similar concept here, that we don't actually want to double count or double recognize revenues and expenses. So those are kind of canceled out when you, for the internal transactions, when you do the government-wide statements. So this slide here might clear up some confusion that you may have. So within the proprietary fund statements, you see the internal service funds set out in a separate column, which is a couple slides back what we saw, where it's presented right next to the enterprise funds. So it's not just added up with those enterprise funds, it's reported separately. And then in the government-wide financial statements, the internal service funds are included with the governmental funds and shown as one total. So that's where you kind of have the dual nature there of them functioning similarly to the enterprise funds at the proprietary fund statement level, and then in the government-wide section they're grouped with the governmental activities so that you can see, because remember at that level all of the accounting is accrual based, so we, at the government-wide level, we want to group those with the other governmental activities to show a total amount for governmental activities. And then at the proprietary fund statement level, the reason that they're grouped with the enterprise funds and reported on the same statements is because of the nature of using accrual-based accounting on the fund statements, whereas the rest of the governmental activities, you're going to use the modified accrual version and only only be interested in the current and assets and current liabilities. I know that gets a little bit confusing, um, but I think it makes sense if you just try to look at it conceptually on this slide um, for the presentation on the government-wide versus the proprietary fund um, portion of the financial statements. So now we're going to look at statement of cash flows for proprietary funds. These are the various categories that you would see on the statement of cash flows. These last three bullet points here you see are how the statement of cash flows for governments might differ from a for-profit enterprise. You've got capital expenditures removed from other investing activities. Their related financing activities are taken from other financing activities, and capital expenditures and related financing have their own categories here. And then other than that, very similar to a for-profit enterprise. So here you see just an example of what these column headings could look like and what would be included in them. So now let's look at accounting for fiduciary funds. And remember that the nature of these funds is basically the governmental unit or entity is kind of safeguarding these funds for some other use, and usually there's some logical reason as to why they would be safeguarding the funds. Sometimes this happens because the government is the mechanism by which the taxes are levied for some other purpose, and then those would just sit in the government's hands until they're allocated to whatever that other usage is. And here's some example of those. You see investment trust funds, pension trust funds, private purpose trust funds, and the focus of keeping track of these is demonstrating a fulfillment of fiduciary responsibilities. So basically, the safeguarding of those of the funds for whatever special purpose they have, and we use accrual-based accounting for these types of funds. And here you see, as far as what agency funds, which would be a type of fiduciary fund. And like I mentioned before, this could be, the county is the one levying some tax, but it's used for the local government. So the county would hold it in as a custodian until it went over to the city. For the agency model, you just have assets equals liabilities because there is no balance. Whatever the asset is will also be the liability, because if it's an asset that you're holding in place for someone else, eventually you're going to owe that money to someone else. So there's no balance, it's just A equals L. So here's just, you can take a look at this slide, but it's just an example of the function of one of these agency funds, which I think we already got the idea of basically. Here's what that transaction might look like. So county is receiving or has levied taxes for 2 different cities. The next entry down would be the receipt of those taxes. Then the next entry down after that basically shows some holding fee basically that is going to be collected, and then finally the payment of all those liabilities is that bottom journal entry. So trust funds, again, similar to agency funds, but a little bit different. So this is the basic accounting equation for trust funds, and you'll see that this is the very same one that you see within an enterprise fund, and basically just looks like a manipulation of the basic accounting equation with net position holding the spot of what owner's equity would look like. You see within the net asset categories the assets held in trust that are able to be spent versus the assets that are not able to be spent. And then you have some different temporary accounts that would be used as well. Again, this is a reflection of accrual accounting, so it would be very similar in the accounting at least as a for-profit business. And then the financial statements required for financial reporting for fiduciary funds would include a statement of fiduciary net position and a statement of changes in fiduciary net position, which would basically just reconcile 1 year's statement of fiduciary net position with the preceding or following year's statement of fiduciary net position. And since these are not the governmental entity's own assets and liabilities, these statements, while included in the financial statements of the unit, would be separate and not consolidated into the government-wide statements. Okay, so pension funds. This will be a short overview of what a pension fund might look like. You see here that a pension trust fund basically has its own set of GASB pronouncements that need to be followed. We won't get into the complexities per se of accounting for governmental pension trust funds, but you see here that there are some required disclosures and other post-employment benefits that need to be disclosed. And I think I might have mentioned before that there's actually a GASB pronouncement that requires liabilities for the other post-employment benefits to be recorded by the main governmental unit, and there's an actuarial calculation that has to be done to be able to do that. Anyway, that would also it would show up in the disclosures for the governmental unit itself, and also the pension trust fund disclosures as well.